Hey traders, Todd here. Welcome to the free video update. It's Wednesday, June 12th. This will be for Thursday the 13th. And just a quick few little housekeeping things before we jump in. There's two new videos on YouTube. We did the live stream this morning. So that was a good session, I thought. Kind of went into different fun topics. And we just put another video up with this one, Trading Tesla Options with Joe, the intern. Kind of had fun with him. I let him take over my trading platform and kind of close out a trade in Tesla. So go ahead and check that out as well. And I had a beer. It was Friday afternoon. So it was a great kid.
Just following up. Just kind of.
Anyways, to business. Check those videos out if you like. To business. SPX in the that Wednesday live stream that we do 8:45 every Wednesday, we talked about this possible alternate wave count. In that we have two fairly large corrections here back in 2010 into 12, and then another one that's similarly shaped here that could ultimately resolve higher. If you kind of look at this wave 4. It's almost, this is proposed, this is one of my wave counts. It almost looks like a bit of an inverse continuation head and shoulders, right? To move up into channel resistance. So we shall see. It's a possibility. I am tracking several other wave counts, but kind of the way things are acting recently, it's something we really need to keep in mind. The line in the sand for me back on our preferred wave counts continues to be the 786 retracement of the drop from April. We're continuing to be below that. We still have some hedges on, guys. We're short some RUT, long some gold. You know, there's some hedges that we have on, but I'm still mostly long in my stock portfolio with my members, something that I trade publicly with my members. So so there is possibility that we are about to break out of the consolidation that's been in play for a long time in gold here. And that would most likely be a risk-off kind of play. So this is down in the 60-minute chart. This is the setup we're taking here. Most likely the move higher in gold would be risk-off, or it could be stocks rallying with a super accommodative Fed who's like, whatever it takes to generate some inflation and stimulate growth. We'll see. No real correlation there, but those are a couple of the key macro outlooks there. As I mentioned, RUT is also underperforming quite a bit. We have evidence of a motive impulsive decline in the RUT. It's not the prettiest looking thing out there, but it's possible. I'm gonna make a little adjustment there. There we go. So we did kind of close in the lows here. It was a weird kind of day. One thing that we talked about in the members video was the put to call ratio. If you look at the average of the put to call relative to where we've bottomed out in the past, we're not there yet. And that kind of indicates, right, that the put to call should sell off more, which would actually indicate equities go higher. So that alternate wave count that I showed you at the beginning of the video is something that we're going to pay more and more attention to, and we're going to cover that with our members, which is going to be right here. Okay, so more to come on that. Couple things here. We did do some Tesla today with our members. We put the trade out. Where is TSLA? Should be at the top there. It's been a bounce back that we've been looking at here for some time. It falls in fairly well into a fourth wave kind of consolidation. Potentially resistance has been formed into this cluster of fib. So we did do a trade in Tesla. I'll show you the trade. We did a butterfly around the 180. Okay, around the 180 strike. The expected move in Tesla is for the options that we're trading right here about 49. I can't be right. Hold on. What is that? $49. Wow. $50 lower out of 209. That's a big expected move there in those Tesla options. So we have something straight centered around 180, about $30 lower than what the -1 standard deviation is, down around the 180. It's an unbalanced butterfly, which means we've moved the lower strike up 2.5 to bring us a little bit more negative delta to give us this look. If Tesla were to implode off of that wave 4, we still make money. Maximum profit would be up here around $7,000 at 180, and my risk right here is 880. So if we can kind of move down into the 80 to 70 area, that would be ideal for Tesla. What else is on the list I wanted to share with you? In the webinar, and I think I mentioned this on the free video the other night, we did do a LULU earnings trade here. So LULU also had a pretty big expected move for earnings that were just tonight. So we're looking for $16 higher or lower, the expected move, closing at 171. So you're talking 87 or give or take. We structured a butterfly. This is a broken wing butterfly again, just around 187.5, which is the expected move. If you look at the chart here, we were looking for a move up into this cluster of wave 5 resistance. I don't know if we're going to get it all, over the next couple days. It could be another week or two before we get up into that zone. But also we're targeting 200 in LULU. Looks like wrong window. Looks like the reaction earnings so far has been good. So we closed at around 171. We're at 178. So we do have some profits built in here at the open, but we'd really like to start getting it into the mid 180s for Friday. So we shall see. Okay. So be sure to put a thumbs up on this video. I believe you will be watching on YouTube. So if you're not, youtube.com/Todd Gordon. And check out Joe the Intern Trading. And also, if you want to see the Wednesday webinar from this morning. Okay. Also, be sure to subscribe to the channel. All right, guys, leave it there. Have a great night, and see you on the next video update.